Good morning. We will pay attention to asset disposal today when depreciation is written off according to the cost price method. Springs Traders owned the following vehicles on the 30th of June 2014. The cost price of vehicle A is 80,000, the cost price of vehicle B is 200,000, and we are completing the books after the 30th of June because vehicle C was purchased on the 1st of October 2014. So our financial year that we are recording will be from the 1st of July 2014 up to the 30th of June 2015. So that means that this is our opening balances, the information that they give us at the beginning of the year. So I will add the two amounts together and say that before the first day of the current financial year, the balance in the vehicles account was 300,000. Depreciation is provided at 20% in accordance with the straight line method. Vehicle A was sold for cash and vehicle C was purchased on the 1st of October for 250,000. So in my vehicles account, I will indicate that vehicles increased with 250,000 on the 1st of October. The first entry that we have to record is to determine what is our depreciation on this vehicle that is sold. They tell us that it was sold for cash, and they say that the date that the vehicle was sold was the 30th of September 2014. The purchase date was the 1st of January 2012. So we will have to take these two dates into account when we calculate the depreciation. Vehicle A was purchased on the 1st of January. The end of the financial year is 30 June. So in the first year, we only used the vehicle for 6 months, and the cost price was 80,000, so the depreciation was 8,000 rand. From the 1st of July 2012 until 2013, we used it for the full year, so the depreciation was 16,000. Then from the 1st of July 2013 until the end of 30 June 2014, so that is the date before our current financial year. We used the asset for the full year, 16,000. Our new vehicle was purchased on the 1st of July 2014, so that means there was no depreciation in the previous year because we bought it on the last day of the financial year. If I want to know what is the balance in my accumulated depreciation account, I only had one asset, vehicle A, on which depreciation was written off in previous years. Then I will add these total amounts together and we see that we've already written off 40,000 in the previous years. So I will open my accumulated depreciation account with a balance of 40,000. On the first day of the current financial year, we start off with a balance of 40,000. Okay, now because this is the cost price method, we can calculate depreciation without taking previous accumulated depreciation into account. Step number 1 is to calculate depreciation for the current year on the asset that was sold. We started using it on the first day of the financial year. We sold it on the 30th of September, so we used it for July, August, September, and we will only work out depreciation for 3 months. And that will give me a total of 4,000 rand. So the depreciation for the current year is 4,000 to get my books up to date before I sell my asset. The depreciation account will be debited with the 4,000 Rand, step number 1, and accumulated depreciation will be credited with 4,000 to do my double entry for step number 1. All the entries for the asset disposal, so all 5 entries will be completed on the September the 30th. My second entry is to transfer the asset from my asset account, because I don't have this asset anymore, to the asset disposal account. I will reduce my asset with 80,000, the original cost price of the asset, my step number 2, and I will transfer it to the realization or asset disposal account on the debit side to complete the double entry for step number 2. Step number 3, we have to record the total accumulated depreciation on the asset from the purchase date until the date that it is sold. Vehicle A, we've written off 40,000 in previous years, plus the 4,000 of the current year. So that means my step number 3 is to record that the total accumulated depreciation written off on this asset from the date of purchase until the date that we sell it is 44,000 Rand. Accumulated depreciation has a credit balance, so to remove it from the accumulated depreciation account, we have to debit accumulated depreciation, step number 3, and transfer it to the asset disposal account on the credit side, the 44,000. Step number 4 is to determine how much money did we get and whether this transaction was cash or credit. And they give us the sales price as 30,000, and they say that the vehicle was sold for cash. In the asset disposal account, my step number 4 will be to show that the bank account is debited with the 30,000 that we receive, and asset disposal is credited with the 30,000. Step number 5 is to determine whether we made a profit and loss. In the realization account, if I balance the account, on the debit side I've got 80,000, on the credit side I've got 74 plus 30, so that's 74,000. So we made a loss of 6,000, and that is my step number 5, and I will debit loss on sale of asset to indicate that we've made a loss. You can also calculate the loss by saying that the carrying amount is the cost 80 less the accumulated depreciation 44. So that means the carrying amount is what is it worth, is 36,000. We only receive 30, so we receive less than the carrying amount. Therefore, we made a loss of 6,000 Rand. Vehicle A and B was included in the opening balance, the 300,000. Then they say vehicle C was purchased on the 1st of October for 250,000. So we recorded this new asset. At the end of the financial year, we have to calculate depreciation on all the assets that we still have in our possession. So we've sold vehicle A. Vehicle B we used for the whole year. So we will write off depreciation on this 200,000 for the full year. Vehicle C was purchased on the 1st of October, so we didn't use it for the whole year. So we will write off on the 250,000 for the number of months that we use the asset in the current year. Vehicle B was used for the full year. The cost price was 200,000 times 20% will give me 40,000 rand. Vehicle C was purchased on the 1st of October, so I will only calculate depreciation from 1 October up to 30 June. That is for 9 months, and that will give me 37,500. Although we calculate depreciation on vehicle B and C, we must only record the total amount as one entry in the ledger account for depreciation. The depreciation account will be debited to increase the expense, and accumulated depreciation will be credited with a 77,500 to increase your total accumulated depreciation. Because the only asset that we had until the end of the previous year was the vehicle A that was sold, it means that our closing balance for accumulated depreciation in this exercise will be 77,500. Normally you will have to add up the credit side, subtract the debit side to work out what is the balance. The vehicles account added up on the debit side as 550, less the 80 will give me a balance of 470 that will be brought down to the next financial year. The nominal accounts will be closed off to the profit and loss account, so I will add up the depreciation on the debit side and transfer the total amount to my profit and loss as expense. The loss on sale of asset will also be transferred to the profit and loss as an expense of 6,000 rand. When we prepare the note for the assets, we will use the vehicles account and the accumulated depreciation account on vehicles to record all the entries in the notes. Every figure that is written in the vehicles or accumulated depreciation account must appear in the note. So my opening balance was 300,000 for vehicles, and my opening balance for accumulated depreciation is 40,000. We will therefore show the opening balance for vehicles at the beginning of the year and the accumulated depreciation, and then I have to calculate what is the carrying amount, what is this asset worth at the beginning of the year. So I will take the cost price 300,000 minus the accumulated depreciation of 40, and that will give me my opening balance. In the accumulated depreciation account, we've written off depreciation of 4,000, and we've written off depreciation as 77,500. So I will add those two together and indicate that the assets were reduced with 81,500. And here I will indicate under movements that assets were reduced with depreciation of 4,000 and 77,000, and that means that the value of my assets decreased with 81,500. In my vehicles account, I see that I purchased an additional vehicle, so I will indicate that vehicles increased with 250,000. In the note, there's an addition of 250,000. To determine the value carrying amount, we have to use the 80,000 cost price that we removed from our asset account, subtract the accumulated depreciation on asset A, 44,000. That means 80,000 less 44,000 gives us a carrying amount of 36,000. and I will show in the note that my asset value decreased with 36,000. Then if I want to calculate the movements, I will use the 250,000 minus the 81,500 minus the 36,000, and that will give me a positive movement of 132,500. We will use the closing balance of vehicles is 470,000. The closing balance of accumulated depreciation is 77,500. Therefore, we will indicate that the cost price at the end of the year is 470,000 and the total accumulated depreciation balance at the end of the year is 77,500. 470,000 minus the 77,500 will give me 392,500. So that is what my asset is worth at the end of the year. To check yourself, you can use this opening balance 260,000 plus the 132,500 movement, and if I add those two together, it must give me the same answer as what I recorded when I worked out what was the carrying amount. What did we learn? When an asset is sold, you must complete 5 transactions. Calculate the depreciation for the current year and record the depreciation to get your books up to date. Transfer the cost price to remove the cost price from your asset account and transfer it to asset disposal. Determine what is the total accumulated depreciation of the asset that is sold from the purchase date until the date the asset is sold, and transfer the total accumulated depreciation to asset disposal. Then you will record a transaction for the sales price, whether it was a cash transaction, credit transaction, accident, where the car was written off, whichever transaction that occurred, why you don't have this asset anymore. And then you will determine, balancing your asset disposal account, whether you determined a profit or a loss. Calculate and record depreciation on the existing assets that you are still using at the end of the financial year.